This video is about trading gaps. So I watched a couple videos online about some of these traders are trading gaps, and they show how they do that. But I think there's a couple of real important points that they're not mentioning. So I figured I'd do a video and maybe mention those important elements. So there's a 1 hour chart on the ES. This way you can see how many, there's a lot of gaps in here, and there's actually more. There's little tiny ones in here, a little tiny one in there. There's one right there, but they're smaller, so I'm mentioning the larger gaps. So I wrote this out a while ago. These are the primary laws. Markets go up, markets go down, markets go sideways, which are the balance areas. Markets trend, and markets retrace. So what that means is those are the things that I look for before I trade. And so I need to find out, of course the markets go up and they go down. That's just what markets do. And they go sideways like this. And so I look for balance areas right here. And then markets trend. So you got to find out where the trend is. Now, if you're going to be a day trader, then you need to find out what the trend is on a short-term trend and possibly even a mid-term trend to see where this market is going and where the momentum is at that time too. And then markets retrace. So basically what gaps are, when gaps get filled, like this one here, the market's retracing. That's what it's doing. And the market goes down and comes back, so it's retracing. You can say that it retraces. You can use that terminology instead of a gap. As the market goes up, it comes down. It didn't retrace until it got to here. This one came down and came up and retraced pretty fast. So the point that I'm making is you got to find out where the market is trending, and then you got to find out the momentum. So this gapped and it never retraced because there's so much momentum going up. And this one gapped and it came down and it went right back up, gapped again, went up. So the markets don't always fill themselves. The gaps don't fill themselves because of several reasons. One, you got to find out where the trend is, and then you got to find out momentum. And also, if you're a day trader, you want these gaps to fill that day. You don't want to wait the next day because you're only in for one day. So a couple good day trades. We'll see, like this one here. This one gapped up, but it never really refilled. Refilled that gap up until I got to here. This one refilled it right away. So this would have been a good day trade here. This one's a good day trade here. But you can see the ones that are not actually really good day trades. So that's what's important about these gaps. Now this one went down. This is a good day trade. So you can say maybe 60-70% of these, or even less, were good day trades. So not every gap is a good day trade because, like I said, it doesn't get filled. It either doesn't get filled, like this one never got filled, this one didn't get filled, or it takes, sometimes a couple days, so sometimes a couple weeks, and sometimes a couple months to get filled. So you got to be careful with gaps. And like I said, you got to find out where trend is first of all. So I'm making this video today. Today's the 25th of April. So this is actually what happened today. And the market gapped down, and it did a trend down day. So as I mentioned in my other videos, trend down days or trend up days, trend days only happen once or twice a month, sometimes just one time. And so they're not that common, but that's what happened today. So the market had a lot of force going down, and it gapped, but it didn't refill it today. So that would not have been a good trade as far as a day trade. Didn't come back. Now tomorrow might be a different story. It might come back up. But the momentum is down, so it might not come up that far because that means it'd have to come all the way up to here. Now it can do that if it's news driven. And if tomorrow's news driven and it comes up and it fills that gap, then I'm definitely going to short that, because that's probably about a 95% chance that it's going to turn around. That's if it does it early. You have to watch the time. Now, this all needs to happen early. If it does it later on in a day, like around 4 hours of trading, then maybe it might not come down. But if this is news driven, especially at open, and it comes up and it fills this gap, then this would be a good short, especially with the market already being so long here and it's ready to come down. So those are the other things you have to watch for. It's not that easy. You see a gap and you think it's going to be filled, and like I just showed you here, not all gaps are filled. In fact, there's a bunch that are not filled, at least for a day trade. So this is why some people wonder why there's videos out there about trading gaps and people try it and it doesn't work, and that's because they're not consistent. So just to reiterate, you got to know where trend is, you got to know where the momentum is going, how strong it is, and there's a lot of things that come into play. Like I said, this is a balance area that's been balancing for so long. It's time for it to break down, and if it does break down like it's doing now you got a lot of momentum, and I think that's why this happened here. All kinds of momentum. Of course, you look at the news and the news says something, and I never believe the news, because a lot of times the market goes up on bad news and it goes down on good news. So they just need to write about something, and so I would ignore the news. The only time I pay attention to news is if this early morning and the market gaps. Like I said, if it gaps, if the market has a tendency in going down, but this thing gaps up on news, then there's nothing to support that, and it's going to turn around and go down. Those are good trades. Okay, I think I covered just about everything about as far as trading gas, because it's not rocket science. It's pretty simple what's going on here. As far as trading it, it's not that easy. You can see that when I show here. So like I said, tomorrow, if this thing gaps up on news, that's the time to trade it. Anything that's news driven and it gaps up, especially against trend, if the trend is down and it gaps up, then probably a 95% chance it's going to come back down. If the trend is up and it gaps down on news, then 95% chance it's going to go up. So those are really ideal trades right there. And that's how I would trade my gaps. Anything in here, sure, you can trade a couple. I think there's about 2 or 3 out of all these that I would possibly trade, but they're not 100%. But like I said, this one here I just mentioned, that's pretty close to, that's like in a 90% range. And then so this is how I would trade a gap. Okay, that's it for this video.